Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Form 8K report from Worksport, and let me tell you, the numbers they're throwing around might make your head spin faster than a Tesla on ludicrous mode. Are these figures too good to be true, or is Worksport on its way to becoming the next big thing in the automotive industry? Let's get to it. This report came out on March 27, 2025, so it's fairly recent. An 8K form is something companies file to tell investors about big news. It's like a financial bat signal, alerting everyone that something important has happened. This form is called 8K, which is basically a short-term report about important things that happened. Worksport is officially based in Nevada. It's always good to know where a company calls home, even if it's just for tax purposes. Their stock trades under the ticker symbol WKSP on the Nasdaq. If you are interested in buying stocks, this is how you can find their stock. Now, let's dive into the meat of the report. This part is about something called Regulation FD disclosure. Basically, it means companies have to share important information with everyone at the same time, not just a select few. The big news here is that Worksport issued a press release announcing their fiscal year 2024 results. And get this, they're claiming a whopping 455% year-over-year revenue growth. That's like going from selling lemonade on the corner to owning the entire juice market overnight. That kind of jump is rare, so it's definitely something to look at closely. They attached the official press release as Exhibit 99.1. We'd want to check that release to see if that 455% number holds up. It's important to always dig into the details and not just take the headline at face value. Now that's about all we have in this 8K filing. It's pretty short, but that big revenue growth number is what's really interesting here. Now let's take a broader look at Worksport. Worksport seems to be riding a wave of success, at least according to this report. The claimed 455% revenue growth is a huge win if it's accurate. But let's be real, numbers don't always tell the whole story. Here are a few things to keep in mind. First, it's important to check the source of that revenue growth. Is it from one big deal, or is it from lots of happy customers buying their products? A single big contract can make the numbers look amazing for a year, but it's not sustainable in the long run. You want to see steady, consistent growth. Second, what about their costs? Are they spending a ton of money to get that revenue? Sometimes companies boost their sales by slashing prices or spending crazy amounts on advertising. That can lead to short-term gains, but long-term pain. You want to see revenue growth combined with healthy profit margins. Finally, what's the competition doing? Are other companies in the same industry growing just as fast? If so, Worksport is just keeping up with the pack. But if they're growing much faster than their rivals, it means they're doing something special. Looking ahead, Worksport has some potential risks and opportunities. The electric vehicle market is booming, but it's also getting crowded. Worksport needs to stay ahead of the game by innovating and offering unique products that customers really want. They also need to manage their money wisely. Growing too fast can be dangerous if they run out of cash or take on too much debt. They need to strike a balance between investing in the future and staying financially stable. So, what's the bottom line? Worksport's reported revenue growth is definitely eye-catching, but it's important to dig deeper and look at the underlying factors. Are they growing sustainably? Are they making a profit? And are they beating the competition? Ultimately, whether Worksport is a good investment depends on your own risk tolerance and your belief in their long-term potential. Do your homework, read the fine print, and don't just rely on the headlines. Thanks for watching. If you enjoyed this Corporate Decoder video, give us a like, leave a comment, and subscribe for more deep dives into the world of finance. See you next time.